Good day to one and all. This is Dr.Sivaraman of iknowindices.com. So I'll be presenting the Asian session live market analysis and the forecast webinar now on 30th of October, the last trading day of the month. Between 5 and 5:30 GMT, I'll try to recall upon the forecast what I have given it on Monday 26th. The forecast was given for the week 26th to 30th of October, and I will try to review the forecast in relation to that of 4 majors and 2 commodity pairs, and we will also try to find out for weekend how exactly they are expected to make their move. Now, let me show the slide of the forecast. Okay, so we will touch upon 3 important components, namely the derived forecast, the market reading and the live market analysis using the live market code page, and also the initial lows and the highs. And also we will discuss on the trading strategy so that we will be able to consistently earn money from that other market. So first of all, the forecast part of it. So last week they have been forming up Euro and GBP on Monday, and then subsequently they made the slide on Tuesday as envisaged, and they were expected to gain the levels during that of the US session on Wednesday, but they made the drop after that of the FOMC. They gained the levels before that of FOMC and then subsequently made the drop. So on Wednesday I gave the spike trade recommendation. At that time, I was explaining that Euro and GBP were above that of the initial high, so we can do a buy and sell trade. And also I gave the trade call, and subsequently what happened that after that of FOMC announcement, even though that interest rate decision, there is no change, but with regard to the statement, they said that they are hawkish. And as a result, they made the drop in the case of Euro and GBP much against the expectations of the forecast. So in such an event or situation, we use the trading strategy to earn on either way moves of the market. So I was recommending the hedge order to limit the risk 30 pips away from that of the entry. So during the drop, and someone was also asking, will you be able to demonstrate it live how exactly we hedge and handle it? But unfortunately there were I was not in a position to continue my discussion because the slot allotted was only for about 15 minutes. So anyhow, when this opportunity comes, I will explain to you during that of the spike trade how exactly we can do the spike trade using the hedge order to limit the risk and maximize the profit using the trailing stop and the trailing limit order. So when they are hedged and immediately the hedge was making profit, so we can keep stop at entry the hedge, and then subsequently they dropped Euro from 1.1070 area to 1.09 area. So once they form the drop and not cut the new low for more than 30 minutes, we can simply book profit in the hedge, as we know that this was a quick downward move and they are expected to reverse it. So we could have booked the profit on the sell side and kept another 30 pips below the hedge order. The next day, Thursday, they have been slowly firming up, Euro and GBP, but pretended as if they don't have the strength to gain further. And now today, it is on Friday, 30th of October, they have just made the visible gain from that of yesterday towards the US session close, and also today you come across all the 4 majors are showing positive net change, indicating a contrarian move on the upside. So they just made the rise and they are expected to make a sideways move here, may not be a big slide, and then continue to rise during that of the US session for the month end and also for the weekend. So this is the last week of the month of October. So during that of the trend reversal time, they are expected to make such knee-jerk reactions. So that is what we anticipate. So we expect the unexpected. In the event, if the market goes against that of the forecast, immediately we follow the trading strategy and try to book profit on the sell side and keep the hedge order and slowly trail it upward. So once the buy position started reducing the loss, but still the loss will be only 30 pips. The other one, we have booked a profit. So once the market moves from that of the low, once where we have cut the sell hedge order, hedge position, then once the market moves 30 pips above, if we close it, we will have no profit, no loss. But if we maximize the profit on the buy side also using the hedge order, as long as the position is making loss, and then subsequently use the trailing stop in a profit making position and try to maximize the profit with the trailing stop and that of the trailing exit order or the take profit order, we'll be able to earn on either way moves of the market. So basically, when such moves happen in the market, they are great trading opportunities. But because of the market fear, many of the people have got the tendency to wait for the market to settle down with regard to that of the volatility, and then later on they enter into the market aiming 10-15 pips profit. But if you have traded on the FOMC, then on the downside we would have booked about 120 pips profit, and on the upside we would have just closed it again with a nominal profit. If you want to close it now or today during the US session, we will have about 100 pips profit in the case of Euro as well. They will try to gain the levels. So that is what the forecast envisage. The next week is the first week of November. Again, the month end and the month beginning time, the trend reversal time. To 2nd to 6th of November, they are expected to make the volatile moves, and slowly they are expected to gain the levels for that of the non-farm payroll, etc. So ultimately, what we need to understand is the long-term trend of the market. The long-term trend, if you understand and try to trade using the hedge order, whenever they are making the intraday downward move, you can use the hedge to limit the risk and book profit of that drop and in the hedge position, and then continue with that of the buy position. We'll be able to really understand that we continue to make profit whichever way the market makes the move. So there comes your skill set, how you are going to handle it. And for that, you have to get rid of the market fear, and also you should be in a position to read the intentions of the players. Now, with regard to the levels in which the currency is expected to trade, from that of 1.10 euro, they just made another 100 pips drop, and they almost gained closer to that of 1.10 now, and they are expected to go above, and for weekend they could gain another 100 to 150 pips. Then in the case of GBP, 1.53 was the expected low. They came down to 1.5243 and then recovered now to 1.5311, and they are expected to slowly gain the level during the US session in a big way. Then in the case of yen, 120.25 was the expected low. They came down to 120.16, and then 121.50 they showed it on Monday, and they are now approaching it. They have come closer to the 121.47, and they are likely to go up. So now we can understand that they have just made the drop in the case of Euro and GBP to gain the levels in the case of USD yen and USD CHF. But subsequently, when Euro and GBP gained the last levels, they are not dropping USD yen and USD CHF. This is what you need to understand. So they wanted to gain the levels in all the four majors. As a result, the US dollar index will have less impact because Euro and GBP will try to pull down the US dollar index, but USD and USD CHF will push up the US dollar index. As a result, you will come across a negligible or a insignificant gain or loss might be seen in the case of US dollar index. So this is mainly to confuse the traders who follow the US dollar index as their relative strength to correlate to that of the strength of US dollar. So their players pretend as if the market is trying to correlate or having enormous correlation with regard to various other markets. Sometimes back people were referring euro with that of gold, and subsequently they have been referring to that of the stock market, and also earlier years they used to refer it to the Nikkei and Hang index and things like that. So they will try to correlate with various markets so that people will try to explore the possibility of those correlations, and later on find they are nothing but the coincidences the players try to bring in, and finally the players create the market sentiment and act against it of the traders. That is what we need to understand. So let us do the market reading part of it. Now today euro formed the initial low $1.0975. The gained levels, it has not lost it, and then it came down 10 pips below 1.0965 as a downward stop, and gone above that of 1.0980. It is 1.0975, so it is likely to gain the levels above that of 1.10 during that of the European session and make some sideways move. On the US session, they are expected to continue to gain the levels. Before that, what will happen? USD yen, they will try to gain as much as possible to pretend as if US dollar is going to gain back again. So the traders will think that euro and GBP could drop. So they are all nothing but the dead cat bounce back effect. So they will try to take sell positions. For the weekend, the players quickly gain the level, and whatever they bought it around 1.09, they will sell it around 1.11 level. So happily they book profit for weekend without holding any position. They just exit out of the market. Only the traders will talk about that of FOMC impact, what is going to be the interest rate, the decision in December, what is going to be ECB December conclusions, etc. But the players just make the moves for every week and try to consistently earn money from that of such traders who think that the market is driven by fundamentals. But when you think that the market is driven by fundamentals, then the same analyst will say that no, now the market is driven by technicals. Then later on, when you follow the technicals and try to understand, okay, the market is going to follow technicals, but it's not working properly, then they will say, no, fundamental is important. So this is how the traders get confused. And when I have seen in many of the webinars and other places, the restless traders asking the speakers the question, can you show or talk about the levels, whether it will come down or go up, rather than talking about the economic conditions? Because these economic conditions, even the highly learned economist may not be able to understand. So we don't have any competence to talk about such economic conditions unless and otherwise we are qualified to talk about the microeconomic status of the various countries. Because only when you understand the microeconomic status of the country, we will be able to understand the fluctuations associated in the market. But we only talk about that there is going to be a noise after that of the data release. And you just recollect, on Wednesday, US session, the euro made a massive drop, GBP made a nominal drop. And now on Thursday, same US session, within 24 hours, euro gained back most of the losses. And another 100 pip gain, it will be to that of the high on Wednesday. It will go back to the highest level of the Wednesday. So the impact, what you considered, as because of FOMC statement is just discounted in a matter of 2 days. So can the fundamentals become irrelevant in just a matter of 2 days? Then in what way you can consider the fundamentals drive the market? And we can simply say that the fundamentals of US is now, it was important on Wednesday. Now the fundamentals of UK is important, or fundamentals of Europe is important, and we can continue to talk like that. Okay, let the fundamentals of US be strong, so let the US dollar gain, thereby Euro and GBP come down. But when fundamentals of Europe is strong, why should US dollar weaken? Because these are all nothing but the ratios. Euro, US dollar, it's nothing but the ratio. Euro value divided by US dollar value is the ratio. It is given in fourth decimal or fifth decimal in the platforms. So ultimately, if you ask those questions, you'll be able to really understand that the players use such excuses in order to make spikes, in order to make the spikes in the market on the upside and the downside. So they can do it any way they want, and sometimes they can make the moves in tandem with it of the expectations of the market based on the data release. Sometimes they can simply give a different interpretation and make a move against that of the expectations of the traders also. That is why I give importance to that of the trading strategy as a vital thing in order to consistently earn money from the market. Now, in the case of GBP, 1.5308 is the low, which is not breached. 1.5335 is the high, which is also not breached. But here, GBP is also in 4 pips positive net change. But as I explained, that USD is making about 14 pips positive net change. So when Euro, USD, and GBP gain the level, automatically you can envisage that yen crosses will also gain the levels. So already Euro yen and GBP yen started gaining the levels. They will make a big gain in those crosses as well, because they are making the contrarian move at the moment. In the case of the majors, all 4 majors are showing positive net change, and in the case of commodity pairs, they are showing the USD weakening move. AUD is in positive net change and Canadian dollar is in negative net change. And always keep in mind that during that of the last week and the first week of the month, they will make massive moves. One such example is Canadian dollar. On Wednesday, they made a massive drop from that of 1.32 level to 1.3080 level, and then subsequently they gained back all the level. Most of the losses they gained it. Again, they started making that drop. So this sort of moves, they do it mainly to whip some moves. They do it mainly to hit the stops on either side, and also to handle that of the derivative market. Those who have got the put options and the call options in the market, the lower level put option and the higher level call options, they will, before the expiry, they will simply close it. And those who have been in the money, they will wait to maximize the profit with the US dollar sentiment or the euro sentiment, whatever it is. But subsequently, the players make either way stop and moves and close all the positions. Those who wait till the end of the expiry time. So this is what you need to understand with regard to the derivative market. And also in the case of CHF, they've been gaining slowly from that of 0.97, and you know that the extended stop and they made it to that of 0.94 the week before and started gaining the level all through and come up to that of 91.45 on Wednesday, and they are holding around 99, and they are likely to breach parity soon. So they will try to oscillate here, and when euro is gaining, they are also gaining the levels in the case of CHF and not dropping it correspondingly. That's what many people will envisage and take sell positions, and then the players will try to trap them. Then in the case of Canadian dollar, 1.3144 is the low, 1.3173 is the high. They are not breached the low or the high. Then Australian dollar, 0.7070 is the low, 0.7112 is the high. They breached the high and formed 0.7118, and they are holding slightly below that. Now they are expected to swing and go up again in the case of Australian dollar. So during the day, you will be able to find that excepting late European session, the rest of the time, they are expected to make slow gain as the intentional move. You know that the players make quick drop and slow gain. So the slow gain is their intention. That means they continue to gain the level slowly and make such extended downward stop, and in order to induce those who are holding the long position without appropriate trading strategy to liquidate the long position and loss, and then they buy from such traders, and then later on they continue to gain the levels. Now let us come to that of the trade calls. So we can keep, initially I kept some limit order during the start of the before the webinar time, but the market has already gone up. So you can take a buy limit because they already come above that of the initial high. So we'll keep it as 77 so that they will give a definite fill. 100 pips above, we can keep the exit order, take profit order, and 30 pips below the stop or the hedge order to limit the risk, 30 pips below that of the buy limit. Then in the case of GBP, I thought that they will make a brief downward stop and similar to that of Euro, what they have done it, but they are not done it. So probably we'll keep at 9. They could come down to that of low. So around 130 pips, we'll try to take. So I kept the buy limit order 1.0977, and in the case of GBP 1.5309, and see whether they are giving a fill during start of the late Japanese session by 6 GMT, and then subsequently they will start gaining the level. Then we will try to keep stop at entry and remove the hedge order in the event if they continue to rise. If they make a quick drop during that gap time before the start of the European session, if the hedge is filled, then we'll watch. If the hedge which is filled does not make profit for more than 10 minutes to 30 minutes, then immediately we close it with a nominal loss and keep another hedge order and continue to hold the buy position and maximize the profit, because it is for weekend they are expected to make a massive gain in the case of Euro and GBP. Now, from next week, 2nd of November, I'll be giving it on Monday, the next week forecast. And at that time onwards, you will come across the daylight saving system is shifted to that of the standard time, both in Europe as well as in US. As a result, you will find that 00730 to 730 is the Japanese session, 730 to 8 GMT is the gap time, and 8 to 14 GMT is the European session. Then 14 to 14:30 is the gap time. Then 14:30 to 21:30 is the US session. So there is a shift of 1 hour in the US session. Instead of 13:30, it will be 14:30, and ending instead of 20:30, it will be 21:30. Then the gap time is reduced by 1 hour. The gap time between the US and the Japanese session of the next day were actually from 20:30 to 0030. Now it will be 21:30 to 0030 of the Japanese session. So these are all the changes with regard to the session timings. So carefully make a note of it and try to see that early and the late sessions they handle the majors, and the mid sessions they handle the crosses, and trade accordingly. Then also try to find out that early and the late session, early session if they make a dip in the case of euro, the late session they will make a rise. If they make a rise during the early session, understand they will make a dip during that of the late session. So if you carefully watch the session wise moves, then easily you can do session wise swing trades in the market. The players are here to trap the traders and earn money. So you trade along with it of the players, understanding their language, understanding the secrets of the trading success. And then you find that you become a master of the market. So I take this opportunity to thank FX Street for the facilities provided to present the webinar, and also you people for your kind presence. And if you have got any questions, you can ask me. Then I will give the next webinar 2nd of November on Monday. And these webinars are all recorded and displayed in YouTube and also in FX Street blog, FX Street under the watch list. So you can look for the watch list. Under that, you'll come across every webinar is being recorded and displayed. And also you can go to I know indices my website.com/blog. There I also give the link for the recorded webinars for your future reference. Now let me answer that of the questions. Then Jag has got a question. Expected level for USD CAD next week. USD CAD is expected to make a downward move to that of 1.29 again by next week, early next week. Then Sharon, good day. As I judge the move in the market, the players are not yet going to shift the trading zone upward in the case of Euro and GBP, because they are actually shifting the trading zone in the case of USDN and USD CHF. Then later on, they will come to Euro and GBP. That's what they are doing it now. Because they are in the new zones now, especially USD CHF is in new zone of 0.99. And USDN also consolidating around 119 to 120, and they have come to 121. Because there is no extended down. Yes, there is no extended downward stop, but in the case of USD CHF, they made the extended downward stop into 0.94 and then started gaining the levels. And in the case of yen, they did not. They came down only to 119 and went up. So they could make another extended downward stop, because they have to push the yen crosses on the downside for the month beginning next week. So they could drop Euro and GBP and along with that USD yen and make a drop, and then continue to rise USD CHF, and later on gain the levels in the case of Euro, USD yen and GBP. So they handle only two currencies at a time, so you have to understand what two currencies they are handling. So at the moment they are holding Australian dollar and Canadian dollar. They are not making much moves. They are focusing on the denominator currencies, majors, USD and USD CHF, and they will slowly gain the levels in the case of Euro and GBP as well. Yeah. Okay, I will show the slide of the trade recommendation. Okay. These are all the levels, two levels I have given it. And you can take, in fact, the positions in the case of Euro yen and GBP yen also, since they are making the contrarian move in all. So they are pretending, they are making a downward stop now in the case of Euro yen by pushing USD yen quickly on the downside and then start gaining the levels. So watch and take the buy positions in the case of Euro yen and GBP yen. They will gain the levels during the day, you can find out. Because BOJ press conference, they are trying to create some hype. They are trying to bring in such big volatile moves, and they will quickly gain the levels later on. You can watch it. At that time, Euro and GBP will be holding. Yeah. Balaji. If the hedge order is filled, we see the 30 minutes and close during the start of the European session. No, if the hedge order is filled, immediately we keep stop at entry when the hedge is making profit. And later on find out what sort of moves they are doing it. That is, if you are talking about the hedge on Wednesday, then we have to wait for the new low to be set after the downward move, and then once the new low is not been breached for 30 minutes, then you can close the hedge and keep another hedge order. And in the, if you are talking about current buy and if it is hedged during that of the late session, then you simply watch for 10 to 30 minutes. If the hedge is not making profit, then close and keep another hedge order. Close it with stop at entry or close it with 1 or 2 pip loss and keep another hedge order to limit the risk. And trail it when they gain the levels. Trail the hedge order upward when they gain the level in the market. Any other question? If there are questions, then I am willing to answer those questions. Okay, no more questions coming up. If there are any questions, you can ask me. I'll be willing to answer those questions. Okay. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and wish you all happy trading. See you on Monday. I'll come out with a forecast for the next week. And again, it's going to be the first week of November. The market is expected to be volatile. Be cautious and use always the trading strategy to limit the risk and maximize the profit. And get rid of the market fear. That is not going to help you in trading, and only your smart understanding of the market is going to help you in trading. Thank you one and all. See you on Monday. Wish you all happy trading.